At the last Fed meeting, 12 of 16 members of the Open Market Committee said we're going to have a rate increase probably in December. There were 4 who didn't. You've been advocating maybe we should go slower. Were you one of those 4?
I was one of the 4, yes. And again, I think it's just a question of timing. For me, my forecast right now is, and I had this in the beginning of the year, 3 this year, 2 next year, 2 the year after. Some have accelerated that pace. For me, I have not seen an acceleration of inflation yet. We still see these good job numbers. So I don't think there's a rush. I don't think we have to rush the normalization process going back to neutral. But again, I'm open-minded. I think if inflation starts to accelerate between now and December, I could support a December increase.
Well, what are you looking for in a pause? I mean, we've got 3.7%, 3.8% unemployment. 200,000 people getting hired every month. I mean, what do you accomplish by waiting?
Well, what do you accomplish by moving? I mean, I can ask the opposite question. What do you accomplish by going sooner rather than later? Right now, I think there's good news in the economy. I think there's some risk I continue to worry about with the yield curve, an inversion of the yield curve. So I would like to avoid that risk. So I'd just like to slow the pace.
Well, financial conditions still extraordinarily loose after all the Fed tightening. Long rates are low. Are you having any effect at this point, raising interest rates? Going another 25 in December, would it matter?
I don't know. I mean, I honestly don't know the answer to that question. But again, I think, yes, financial conditions are very accommodative. We're moving the short end. There's a lot of reasons why the long end is not moving, including the flight to safe assets, U.S. Treasuries. So I think I still think we can take our time in moving the rates up.